HCL Tech numbers, which are coming in as we speak. For more details on that, I'm joined by my colleague Rucha. Rucha, what are the numbers looking like? What's your quick takeaway?
Yes, hi Pallavi. So numbers are just out. Revenue is largely in line with estimates, but what is interesting is the profit beat. So profit has come in at around 4,260 crores to be precise, but what was estimated was around 3,800 crores. So almost 11% more than what was estimated. But if we look at it in a quarter-on-quarter basis, we'll see revenue is down about 1.5% versus estimate of 1.6%. So largely in line revenue numbers. But if we talk about the profit numbers, profit was expected to be down about 3.5%. But interestingly, profit has come profit has come in as positive 7%. So this is what is interesting. Talking about EBIT margin have come in line with the estimates at 17.1%. But we'll definitely await for more data from the company, wherein it will also mention about the guidance. Now, talking about the services segment as well as ER&D segment, we'll see that services segment largely almost flat, around 1% down. ER&D is what was interesting, around 5% down. But we have more numbers from the company. Revenue guidance is over here, 3 to 5% YOY in constant currency terms is what the company has guided for FY25. Now, this is in line with what the street was expecting. Street was expecting the company to maintain the guidance, which it has, except one of the brokerage houses which are expecting an uptick. Talking about margin guidance, again, the company has retained the EBIT margin guidance for FY25 at around 18 to 19%. But if we talk about deal wins have come in at 1960, which is a tad lower than what we saw in the last quarter. We saw around 2,300 in the last quarter, but deal wins have been soft. But this is what we also saw for TCS, wherein deal wins a little soft. But we have Mr. Omkar, Senior Research Analyst from Axis Securities. Hi, sir. Welcome to the show. What are your take on the numbers that we've got?
Yeah, I mean, from the prima facie, I believe that the numbers are much in line with our expectations. We were expecting 2% decline in rupee terms and 1.7% in the dollar terms. So it is largely in line with expectation. Because they have already said in their con call that ramping down one large account on BFSI vertical. So we were expecting the numbers to decline for this quarter. The margin came surprise. I mean, it is declined around 40 basis point. So it is also one of the things that one should be looking for. The deal wins came much in line with expectations and continued to be strong with a 2 billion deal wins that they have cracked during the quarter. So outlook seems to be like positive.
Right, sir. Deal wins have come soft. What's your take on the deal wins ideally? Because deal wins were like an all-time high for IT companies during last few quarters. What's your take on deal wins or decline on a quarter-on-quarter basis?
No, I don't think, I mean, they are declining sequentially. I mean, see, they already have, the deals on their pipeline, but deals where, either is putting on hold or not ramping up or they are cancelling. But I believe it's what important is that, they are ramping up the deals or not. But I believe slowly, the momentum is changing. The demand is changing up. Even if you can see, and one indicator that is indicating that they have added around 8,000 odd number of employees during the quarter, which seems like the ramp up is near, which were slow during the in the previous quarters, but now they're slowly ramping up, building the capacity to ramp up for the new deal wins. So increased client engagement and the outlook that must be looking for. I mean, we are love to hear from the management. And also, I mean, they have retained the guidance of 3 to 5%, which was, as we were expecting. So if you can see on Q from henceforth, the company is likely to deliver stronger revenue growth going ahead.
Right, sir. Talking about the headcount numbers have been a decline around 8,000 odd people count over here. But even if we look at the reduction in headcount due to divestiture, it is around 7,300. So again, if we exclude the divestiture effect, we'll see a 1,000 bit of net headcount reduction, which is as against TCS, who added headcount this quarter. So how do you look at the demand perspective overall for HCL Tech?
See, I believe that they have the better composition as compared to the others in challenging times. Because the investment was coming at ER&D space, manufacturing vertical, and BFSI was a major laggard. That's why if you have seen, HCL Tech has delivered stronger growth as compared to the TCS, Wipro, Infosys, and the TechM. So I believe in terms of service metrics, they have a product and platform business which is stood very strong as compared to in third quarters as compared to their Indian large cap peers. So I believe they have better composition in terms of overall business metrics. I believe it's going to deliver a better growth as compared to the believers even in FY25.
So even attrition has been at 12.8% versus around 12% that we can see last quarter. So do you think this is the kind of range where company will be able to maintain the attrition levels?
Yeah, I mean, see, currently, they are going slow on hiring, and the demand is going down. They're sluggish, but slowly I believe slowly the demand is going to pick up over the period of time, and I believe it's more to deliver. The attrition rate may rise due to higher, the demand in next 6 months to 8 months. But I am not worried much about the attrition rate. I believe it's more of on-site expenses, rising on-site expenses, and they are bargaining at the tendering offer, and pricing pressure may impact the profitability going ahead, rather than being the attrition is the major concern over the period. For the current scenario.
Right. So one last question from our end. The financial services segment, which accounts for majority of the company's revenues, have come down on a YOY basis in constant currency terms. And this is what we saw for the major TCS as well. So do you think financial services is yet to recover for the IT companies?
No, it was expected, because they have ramping down the large client account. So it was very known thing during the quarter. But the outlook remain a key concern that we should be, listening from the management, what is going to happen, how the client engagement is ramping up for the other client accounts. So this was much expected. I'm not worried much about it. But one should have to listen what management is exactly saying about, the outlook going ahead and existing large client account, whether there is an increase in the delay in decision making, or the client engagement is increasing, and any ramp up of the new deals that they have won. So that might also create a billing in the following quarters. So I believe the concern about the outlook is from the management is quite necessary to understand.
Right, sir. Thank you so much for joining us today. And that was Mr. Omkar from Axis Securities. But do stay tuned to NDTV Profit. More interesting stories on the other side.